Well, Elijah, it's obvious, as you said, that the COMEX is being, we'll call it drained of silver. And of course, that silver doesn't disappear into the ether, it goes somewhere. And it's primarily going to investors. Last year, we had extreme monetary demand in silver. It was greater than industrial demand, probably for the first time ever. And that, if it continues, and so far this year it looks as if it is, we will have further, I'll call them squeezes in the silver market.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is David Morgan from the Morgan Report. David, thank you so much for your time today.
Well, Elijah, I always like being with you. Thank you.
Definitely. It's great to be with you. And you're one of our most popular guests we have on our channel. And we really wanted to get your perspective on what's happening in especially the silver market right now. Because as being, pretty much the top silver expert there is, we're seeing so many crazy things happen. We saw late February, or really early February, late January, the silver squeeze, and then we saw silver squeeze 2.0 and just this movement to acquire physical silver. And we'll put on the screen this chart that we actually got from the people over at Wall Street Silver. And it kind of shows how there's a lot of silver being drained from the COMEX. And this is really happening since the first silver squeeze. At the same time, we're seeing the PSLV, the Sprott Silver Trust, increasing their silver, the amount of silver that they have. And we've had Rick Rule on talking about how, they've acquired 50 million ounces of silver. The first question would be your perspective on this chart we have on the screen right now.
Well, Elijah, it's obvious, as you said, that the COMEX is being, we'll call it drained of silver. And of course, that silver doesn't disappear into the ether, it goes somewhere. And it's primarily going to investors. So some is going into the PSLV, the Physical Silver Trusts run by Sprott. Some's going into individuals. Some is going into manufacturing of, 100-ounce bars, kilo bars, and, 1-ounce coins or medallions of various mintages. So that's the crux of it. And of course, myself and many, many others throughout all these years have always emphasized that the physical market is the big driver in silver. Industrial plays a very significant role, but it's the margin. It's what is the variable that changes the most, and that is a monetary demand. Last year, we had extreme monetary demand in silver. It was greater than industrial demand, probably for the first time ever. And that, if it continues, and so far this year it looks as if it is, basis the chart you just showed, we will have further, I'll call them squeezes in the silver market. And I think more and more people, and primarily through the Wall Street silver community, are waking up to the fact that silver is an undervalued asset and probably one of the best, if not the best, inflation hedges that there are. Elijah, basically, the silver deliveries are what's important. The physical market will drive it. If you look at history, we've seen 35 million ounces has been kind of a low that I've seen a couple times. It did move the market, but not maybe as significantly as I would have expected. But it's not dependent solely on what the registered category holds, although that's something to watch and is very important. But you could have an overwhelming factor that's, one-off, meaning like the palladium market when Ford Motor Company moved from platinum in the catalytic converter into palladium and had this huge one-off order that decimated the market physically because there really wasn't enough palladium to cover the order. I'm not saying that'll happen in silver. All I'm suggesting is that it's going to go along, and don't be prepared for the unexpected. especially now with the way the market's this tight and the price is not reflecting the true nature of the tightness in the silver market.
No, you mentioned how the price is not reflecting the true nature. And there's a whole debate about whether precious metals are manipulated, and especially silver. And a lot of people believe that the price of silver is manipulated. Some people point to how there's large short positions with the commercial banks. Then other people point out argue that no, those are just hedges for their clients' long positions and they're net neutral. Your perspective on this, and I know you've recently stated that this recent decline in both gold and silver was due to selling on the futures market and did not have to do with the physical demand or physical selling. So kind of your perspective on the manipulation debate, and then also this recent drop in price that we saw in the last couple of weeks.
Well, I used to say, and I'll reiterate it, that you cannot manipulate the long-term trend, but within the long-term trend, you certainly can manipulate the market or change it. I mean, we wrote a book, Chris Marchese and myself, called The Silver Manifesto. And in that book, we basically proved manipulation by using the Sharpe's ratio. I don't have time to explain it, and I don't think I do a good job of it. But if you look at the if you buy the book, which I'm not here to sell books, really don't make any money on them, I'm happy to sell you one. It's the probability, and one of them was what Adrian Douglas did prior to his demise for GATA, being an oil analyst. He carried that over, and it's impossible for a random walk to have the delta in the LBMA and the COMEX time and time again. It's not random. It can't be. I mean, it's a proof. So there's that on manipulation. So just to be crystal clear, I mean, the market, I don't think they're in there manipulating every day, but I do think, or I think it can be proven that from time to time, studying the commercial interests, the commitment of traders, seeing where the price action is, knowing that the funds are out of money. It's time now, boys, to ring their chimes and run the stops, as they say. I mean, it's very common to hear that terminology if you're a pro or semi-pro, run the stops. So they'll say vast amounts of silver on paper that doesn't exist. Or let me reframe that. They could sell vast amount of paper that they hold in their accounts that isn't backed fully by physical, probably more accurate statement. And that drives the price down because silver never stops to ask, is it real or is it fiction? It just says, this is the market. The silver market is a derivatives market. Can I say that again? The silver market is a derivatives market. That means that the silver market is a derivatives market. So it's not based on what the buy and sell of silver is, although of course that plays into it. But it's the amount of paper being pushed back and forth that determines the price. The only way the physical comes into play is when physical demand comes off of that market. So when we continue in this draining of the silver market that you showed in that graph at the same rate that it's at right now, there will come a time when the physical market takes over. As I said earlier, we've already seen it in the palladium market of massive substance because palladium's gone from the time that Ford Motor Company, needed the palladium because it's much cheaper than platinum, folks. You may not know that, but at the time Ford did it, it saved a vast amount of money. And now, of course, palladium is double, at least, the platinum price, if not almost triple. Point being that the physical market does take control. It can take control. It can happen in the silver market. And it already has in a way, and it's still happening in a way, because there's such a spread between the physical market retail and the derivatives market backed by commercial bars, or partially backed by commercial bars. So the arbitrage still exists, meaning I could buy physical silver in commercial bar form and turn it into 100-ounce bars and make a pretty healthy spread. And this has gone on much further than it did in 2011 when we had a huge spread like this. It lasted 3 months maybe. This time it's lasted for months and it continues. Now it is backing off. I'm well aware of that. The premiums are coming down, but not to the level that I would consider normal after looking at this market for 4 decades.
Now, when you talk about kind of there is that opportunity for arbitrage, right? The real retail price is still quite a bit above the spot price, and normally we don't see this much of a premium, right, on the physical metal. Now, your perspective on this whole idea that there's this shortage of physical silver, we keep hearing that, and we keep hearing how it's harder and harder to find physical metal. Is there an actual silver shortage right now?
I don't believe so. There's certainly a shortage of blanks or planchettes for the mint. There's no doubt about that. And, the Mint actually said there was a worldwide silver shortage, and they kind of recanted on that statement, saying that, well, really it's a shortage of blanks to produce silver eagles, which is more accurate. As far as the silver shortage, it's a really tough one because that would mean that the commercial bar market is in, short supply. And, I just got one of my clients that sent me direct from the COMEX, their response for physical delivery, and they settled in cash. And there's really not a darn thing you can do about it, even though he wanted physical delivery, because the contract says they can settle in cash. So I don't want to take one data point, Elijah, jump up and down and say, oh my goodness, David Morgan said that they're settling for cash in all instances. Maybe this is the only one that month. I don't know. I don't know if there's any way to know unless you work for the exchange. But it does prove the point that they could be, I'm not saying are, but they could be settling some of these accounts in cash. And you rant and rave and say, well, I want my metal. Well, read the contract. We have the right to settle in cash, and we did. So that's one of the problems with it. On the other hand, they couldn't do it across the board, although it could come to that at some point in the future. But if they did it across the board, then obviously there'd be a physical default, but not a technical default. I'm not trying to be cute here. I'm trying to be legal. There would be physically impossible to fulfill all the demand in the physical realm, but they wouldn't default legally because they're allowed to settle in paper. So hopefully that's crystal clear. I'd like it to be so. And it does concern me that, I got that reference to, settlement in cash because, again, how long has it been going on? Probably for a long time, but is it small? Is it big? Is it medium? What is it? And I'm going to guess, and I want to settle people's thinking down, that it's probably because it was a relatively meager amount and it's sort of a hassle to do it. But, the person should have the ability, if they want physical, to get it. Now, there's also probably another part to that story, which I don't know. And that's, if you called up and really ranted and raved with the broker, he might be able to persuade the exchange to, find it for him. One more thing before we go on with the PSLV, is I think the best choice, better than the SLV. And of course, there's been a big shift from the SLV to the PSLV. There are other ways to buy commercial bars that are even better than the PSLV, but I'd reserve that for people that are buying in the $50,000 range or higher, because it's not something you can do by buying, silver rounds or silver 100-ounce bars.
And with respect to kind of what we've seen in the last couple of weeks, when we've seen this pullback from like $28 down to the mid 25s, your perspective on why we saw that pullback, the mainstream story is, well, the dollar rose and also the Fed was a bit hawkish. So your perspective on that?
Yeah, it had very little, if nothing, to do with the talk about increasing interest rates, but that's what they want everyone to believe. So it's very coincidental that they took this paper paradigm and sold tons and tons and tons and tons and tons of silver in the paper markets and drove the price down at the same time the Fed was coming out with this more or less hawkish stance. They want people to believe that, one, the Fed's more powerful than it is. I'm trying to pull the curtain back on the little man behind the curtain pulling the levers at the Wizard of Oz, because that's all it really is. And so that occurrence would have driven the market down if it happened a week before the Fed, or a week after, or a month before, or a month after, if it happened tomorrow. It's not a function of interest rates at this time. It's a function of how much paper selling goes on in the market.
And then, so with respect to this pullback that we've seen, you're saying it's essentially more about paper selling than actual physical selling. And what you said in the past also is, just earlier in this interview, was that there's been really more monetary demand for silver than industrial demand. And that's the first time we've seen this, but we've also seen industrial demand ramp up as well. So your perspective on kind of what we've seen in that domain.
Yeah, I just did a study. In fact, it was through the Silver Institute that, I keep in touch with, obviously. And there was a white paper on there on flexible silver, meaning, you print it like on paper and you can, paper's flexible. And that's an industry that's going to ramp up rather substantially over the next decade, as well as many others, solar, anything electrical, and we're going to more digital everywhere in the world. So Matt Watson wrote the paper. It was intriguing, and I was able to establish contact with him. I interviewed him for a mastermind series, and I decided to write about it in the last month's issue of the Morgan Report. But he is projecting that we're going to see silver demand on the industrial side at 80% over the next decade. Right now, we're at about 50%. And it wasn't only silver. I mean, there was a big push into copper and the graphites and a lot of metals, the PGMs. I mean, basically, he's super bullish. I think his work is excellent. I think that his projections are fair. It's really hard going out 10 years. I remember Metals Focus, Jessica Cross wrote about what the photovoltaic demand will be from 2000 until 2000. I take that back. From 2010 to 2020. And for a 10-year out projection, she did pretty darn good. What she didn't, it's hard to speak for somebody else. She probably anticipated technological improvement, but not to the level that it improved. Nonetheless, her guesses were pretty darn accurate. So same thing with Matt. I mean, it won't be exactly that, but that's the trend. The one thing that I would question, and I didn't actually bring it up with them in discussion because I don't want to get off course, is the energy equation. How much are we dependent on oil and all the alternatives to it? The alternatives to it take oil. I mean, to build a solar panel takes vast quantities of oil. To build a wind turbine requires vast quantities of oil. Geothermal even takes vast quantities of oil. So any of these alternatives take oil to get there. So you have to look at the energy return on energy invested to determine whether or not it's viable, where the payback is. Like a solar panel, depending on where you are in the current technology, the payback on it when I put them in my backyard was something about 8 years. So that free energy doesn't really start for my sunk costs, my capital cost to buy them, deliver them, install them, until 8 years of free energy has come my way. Now I've paid for now it's paid for itself. Now, year 9, I'm starting to get free energy. They're only going to last another 10 years beyond that, maybe 15 at the most under current technology. And then I've got to take them out and replace them and start all over again. So there isn't really such thing as renewable energy that goes on forever. It's a misnomer. It's not true. It's fake, false, and phony. And people have got to understand that the energy situation that we're facing, unless there's a breakthrough energy situation, which there could be, and I'm aware of a few ideas. I won't announce them now because I'm not convinced, but they sound plausible. But unless that's the case, we really aren't thinking this through to the best of our ability. And I will be putting out a video shortly, Elijah, and I encourage you and everyone listening to watch it. It will be a really quick study I did in front of everybody. I've done this about 3 times. I just happened to record it this time on Let's Go Green and let's power everything by solar. And I take the variables and I go through them, made a video. And what it showed was that just to power the houses in the United States would take over 1 billion ounces of silver under current technology. And now what do we have? Well, we got every house powered by solar. Whoop-de-doo, it's good. I'm not saying it's a bad thing, It's just that that takes the entire amount of silver, actually more than we have mined and recycled on an annual basis. And we haven't powered any of the commercial buildings. We haven't powered any of the schools, churches, office buildings, theaters, restaurants, warehouses, factories, any of that. And that takes about 50% more energy than the residences take. So now you're looking at, 1.5 billion ounces of silver. So you're looking at about around numbers, 2.5, 3 billion ounces of silver, which is basically the entire above ground supply of silver. And you've powered the United States.
It's so interesting, yeah, because you mentioned how really we do need energy and silver is required for that. I remember last year, as a couple banks were projecting that, Biden would win, and he did, and we'd see a push for green energy. They were saying that silver could go to, $40 or $50 an ounce because of that. We still haven't seen that. Your perspective on why we haven't really seen a significant rise in silver for quite a while now.
Yeah, it's a tough one. And of course, I get asked all the time. I mean, again, the silver market's a derivatives market. There is a lot that goes on in these markets. They're all pretty much under management, stocks, there's algorithms written. I mean, there's very little, what I would call floor trading, if it even exists hardly. I mean, if you go to the Chicago Merc, it's almost a joke. They're still there. There are floor brokers, but everything is what they call off the floor. It's all electronic. A lot of it's algorithms. It's computer fighting computer, and it's a distortion of the real market. I mean, it is the real market in a way, but it's a distortion of the way it used to be. So with that taken into account, we really don't have true price discovery, which means that these algorithms can do what's called delta hedging. And what they do is they see what the change is, not only in a time rate, but they also see what the upper limit is, let's say, and they have an upper limit that they can set. And then what they do to make certain that that upper limit is the upper limit is they hedge by selling options, and they continue to sell until they get to the point that the other side is out of money and can't do a darn thing about it. And then they collapse the market, meaning they'll take it down $1 or $2 or whatever it is. Like we saw, about a $2 decline. If memory serves, I'm doing round numbers recently. And then they start the game over again. And by the way, the game has not started over again in my studied view. The commitment of traders is not all that favorable to go long silver at this point. And then if there is a physical cool off where people go, I bought at 28, it's at 26. I think I'm going to wait. It might come back, or they're out of money, or they decide to buy some real estate, or whatever happens in the market. Then we might see the market come down further. I'm not going to rule it out.
How low are you thinking that the market could come down?
Well, I got a guy from my membership, and he asked me, what is the ultimate low you see if things just went to, Horribleville? And in Horribleville, 18. I don't think we'll see that. I think we're going to stay in the 20s. I'd be surprised if it doesn't hold here, but it may not. I mean, the market's right at that point of inflection right now. But 18's a pretty good drop, and that's like the ultimate worst case scenario I could see, but that's what it is.
Last thoughts with respect to silver. What are some key turning points or key catalysts you are looking for to make you convinced that we could be headed for a breakout to the upside?
Well, it's all about awareness, and Wall Street Silver has certainly brought awareness to the market. So more physical buying. I mean, no matter if you're buying a silver round or a silver bar or a commercial bar, it's still demand. And it's going to help the market overall. And a lot of people that are in the silver market now understand that.
David, we really appreciate your time today. And I guess before we let you go, where can our viewers find you online if they'd like to hear more from you?
Well, obviously from your channel, but themorganreport.com is the main landing page. You sign up for a free newsletter, and if you're so inclined to share it with other people on your social media channel, we would appreciate it. Do have a pretty strong Twitter. I don't interface a lot. I've got, I would say better things to do, but better things to do. I do interface on it from time to time. I do look at some of the feedback and do try to be helpful. And that's at SilverGuru22. That's the handle I have for the Twitter account. I'll leave it at that, Elijah. You can explore more on the blog. It's for free on the site. The about page, which is my biography, but under that's the film, the Four Horsemen film, which is a good overview of the collapse of complex societies, better known as the Four Horsemen film, which is the Age of Empire, and how it comes to an end. It's sort of like the fourth turning, where we are in the super cycle of economic activity. So it's something that's free that if you haven't watched it, most people have pretty positive things to say about it. It's not all negative. It's very matter of fact. It's pretty factual, but it also has some hope at the end of the film.
All right, David, once again, thank you so much for your time, and God bless.
God bless you as well. Thank you, Elijah.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.